Live from Singapore, this is Insight with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Bitcoin sets fresh highs just short of $90,000, taking the overall crypto market's value beyond its pandemic-era peak. We'll speak with long-term Bitcoin investor and evangelist Bobby Lee, the CEO of Ballet, on whether this rally is an all-in bet on President Trump. Also ahead, Bloomberg learns that China is planning to cut taxes for home purchases as the government dials up fiscal support for the property market. Investors also bracing for earnings from big tech firms, including Tencent and Alibaba, for insight into the Chinese consumer's mood. And we get you a view on those stocks from Barclays China tech analyst Jiong Shao, as valuations remain attractively low with earnings forecasts at record highs. Well, Chinese markets are weighing a Bloomberg scoop on Beijing's plans to cut taxes for home purchases to support the sluggish housing sector. Sources say the proposal will allow mega cities, including Shanghai and Beijing, to cut the deed tax for buyers to as low as 1%. Well, for more, let's bring in our China correspondent, Min Lo. Min, we know that there were some hints last Friday. I mean, what do we know right now? What are the new regulations being proposed?
Yeah, so the government is working on this proposal to allow mega cities like Shanghai and Beijing to cut the deed taxes from 3% to 1%. And on top of that, they are looking at possibly scrapping that distinction between ordinary and non-ordinary homes. Now, what are non-ordinary homes? You can understand them as luxury homes above a certain size. In Shanghai, it is above 144 square meters. So on top of deed taxes, right now the regulation says that you have to pay an additional value-added tax of about 5% if you sell these luxury homes within 2 years. So scrapping that distinction would mean it would make it easier for people to upgrade their houses. And of course, this comes after a series of measures that have been rolled out over the past 2 months, including easing home buying curbs, as well as lowering down payment ratios, the existing mortgage rates as well. And really, the government is signaling its intention to stop that decline in the housing market.
Min, realistically, how much impact will it have on home sales? We know that in terms of property recovery, it's been lopsided so far.
Yeah, indeed. And markets are really shrugging off the impact of this potential new regulation. If you look at what the stocks are doing, not really very encouraging as well. But we did see some green shoot in the October data in terms of home sales that turned positive for the first time in about 16 months. It was up 7%, flipping from a decline of 30%. So we have to wait and see this month's data, whether it continues to show that the housing sector is indeed bottoming out. But bear in mind, there are plenty of very sticky issues in the housing sector. Remember that relending facility by the PBOC, 300 billion yuan. The drawdown rate so far is only 5%, which shows that local government are extremely reluctant to use that funding, even if it's available, to buy up these excess houses, to turn them into social housing, because the rental yield is so low. So plenty of structural issues that still needs to be fixed.
And Min, this Bloomberg scoop prompting expectations yet again for big-time stimulus. Is that coming? Are we likely to see?
Yeah, so I think there has been a lot of disappointment that we didn't get a concrete number in terms of, for example, the local government special bond sales that could be used to buy up these idle homes. That's something the government has sort of hinted at, but they didn't really approve the new quota for that. And I think we have to wait until the Central Economic Work Conference in December. That's when policymakers are meeting to discuss what should be the budget for next year. But of course, that final number is going to be revealed only in March during the 2 sessions. But you have the likes of Goldman Sachs, for example, projecting that China could raise the fiscal budget deficit from 3% to 3.6% next year. They are also projecting that given the increased role of local government bonds to be used to buy up idle homes, to resolve local off-the-books hidden debt, they are expecting that the local government special bonds quota is going to be hugely increased for the next year as well.
So for now, still a waiting game. Min, thank you. China correspondent Min Lo. Now, still ahead, we'll get insights on the Bitcoin rally from the CEO of digital wallet provider Ballet. Here, when Bobby Lee thinks it could hit $1 million. That's up next. This is Bloomberg. Welcome back. We're tracking the Bitcoin rally as it marches closer to the $100,000 level. This chart highlights just how rapid the climb has been, with Bitcoin really accelerating gains in the last 2 months as Donald Trump embraced digital assets ahead of his election victory. Now, that's helping to lift the overall value of the crypto market above its pandemic-era peak, according to CoinGecko, that now tops $3.1 trillion. Well, let's get more insight into what's driving this record-breaking rally on Bitcoin. Joining us now is long-term Bitcoin investor and evangelist Bobby Lee, who is the founder and CEO of crypto wallet provider Ballet. Bobby, of course, you've touted $100,000. You're now touting $1 million. Talk to us about why this rally is justified.
So this rally kicked off, on the heels of Trump's election. It's been a crazy week, right? Even into election night, the price started rallying. And when Trump got confirmed as the next president of the United States, a Bitcoin rally really took off. And in the last 24 hours, we saw it jump over 10%. So it's very close to hitting it's already at an all-time high, and it's very close to hitting $90,000. It's been crazy.
Fundamentals, just putting out there, fundamentals have not changed. Use cases have not changed. Is it just a matter of an oppressive regulatory environment turning supportive regulatory environment overnight? Is that what it is about?
I think there's two factors. Number one is, for the first time, we have a truly pro-Bitcoin president, right? So Trump, President Trump, at the time as candidate Trump, in the summer, in July, he gave a big keynote speech at one of the world's largest Bitcoin conferences in Nashville, Tennessee, and came out to be very pro-Bitcoin sort of policies, and the crypto market loved him for that. And with his election, the whole crypto market is very excited. So that's one thing. From a policy perspective, we're anticipating a lot of crypto-favorable policies in the United States. And the US, of course, leads the world in terms of regulation and policy in the financial markets. And it's no different for crypto. But the second thing is that Bitcoin fundamentals has not changed. Bitcoin is 15 years old, turning 16. And the two fundamentals are, it is a decentralized digital asset that is not issued by any country nor any company, and it has a strict limit of 21 million. So these two factors are slowly, through media and coverage, slowly resonating with investors and the global population. And it's taken 15 years to get to where it is today. And it just takes more time for it to really sink in why Bitcoin is a global reserve asset class.
So regulations are changing, but what would really move the needle is institutional buying. How much of that are you seeing happening right now?
So it's been great. This year is a breakout year for Bitcoin. If you recall, earlier this year, the US market approved Bitcoin's first sort of ETF, spot ETF for Bitcoin. And that was in the waiting for many, many years. 5-6 years ago, people were anticipating and eagerly awaiting for final approval for ETF trading. And finally, this year, 2024, we saw that kick off in the first quarter. And so with that, more institutions and individuals, retirement accounts can all buy Bitcoin very safely, very easily, and there are over a dozen choices for ETFs. And similarly, it's mirrored itself. Other markets like Hong Kong have also issued Bitcoin ETFs, and we can see that rolling on a global basis. So now companies itself are also adding Bitcoin to their own balance sheet, of course, led by the market leader MicroStrategy, and many other companies are starting to consider and starting to do it on a smaller scale. So we'll see. We saw individual investors getting into Bitcoin. We saw family office getting in. We saw funds getting in. Now we're seeing institutions, and eventually we'll see governments at the nation state level adding Bitcoin to their reserves. And by the way, this is what Trump talked about.
But the thing is, Bobby, how much of this rally is driven by institutional buying? How much of that are you seeing right now in this rally?
It's hard to say. It's hard to say. One thing is over this long weekend, it's Veterans Day in the United States. So markets were closed on Monday. And in essence, all the ETF trading is not trading, right? So we had a 3-day long weekend. And over the weekend, the rally has really pushed up Bitcoin 10, 15%. And, I personally think the cause of it is that people have no access to the ETF buying, right? So they have to resort to buying on exchanges. It's very hard to identify exactly who is buying. There's unlike a stock market where it's centralized, people can tell which brokerage accounts are buying and so on and so forth. For Bitcoin, given the global nature of it, people are buying on a dozen different large exchanges all over the world. So I think it's a combination of institutions, big whales, and also traders.
You've been calling for $100,000. It's at about 88. When do you see Bitcoin getting to 100K? And when do you see it getting to 1 million? That is what you're projecting.
Yeah. So I anticipate this time we can cross $100,000 this year by end of December 2024. I think it's very easy to get there. I think we're going to cross $90,000 within the week. And it's just 100K will be psychologically a big barrier. So there's a lot of people selling pressure near around $100,000. But I think it's easy to overcome that in the next few weeks. I think we have 7 weeks left in this year, 7-8 weeks left. And then for 1 million, that's a sort of even bigger milestone. We're going to see a bull market this year and next year in 2025. I think it's going to be very hard for Bitcoin to cross $1 million in this cycle. So probably one more bull market cycle. That's probably 5 to 6 years out. And there will be some major price corrections as well. So beware of that volatility.
Bobby, some are suggesting that once Bitcoin get to $90,000, there will be some resistance because of market makers. What do you make of that?
I think the resistance is always there. There was resistance at $80,000. There will be at $90,000, $95,000, $99,000. I think the big resistance will be at $100,000. At the same time, because it's such a psychological target, there will be a lot of bullish speculators who will leverage and push it up. So it's kind of like this big tug of war. When the price gets near $100,000, you'll see more people joining both sides of that tug of war, more people to buy, to smash it past 100,000. And you'll also see at the same time, more sellers coming in to sort of sell off Bitcoin before it approaches $100,000. So that's going to be a very, very big psychological barrier. And I think we have the ability to cross it this year.
It is interesting to see how Bitcoin has breached its pre-pandemic high, right? But we're not seeing the same for Ethereum, for instance. Whereas when it comes to use cases, some say that, Ethereum leads the way. Why is that, you think? Why the differentiating factor in terms of within the crypto world?
Yeah, I'm glad you brought it up. It's an excellent question, the use cases. So I've been in Bitcoin for over 13, almost 14 years. And what I can tell you is that the use case for Bitcoin and Ethereum are fundamentally different. Bitcoin presents itself as money, as digital money, as an asset class, as an investment asset class, where you can hold Bitcoin to sort of protect yourself against inflation of fiat money, because governments all around the world print more and more fiat money, including the US dollar, including all the countries out there. And then that's why you have the inflation, the high CPIs, and all that stuff. Whereas Bitcoin, fundamentally, it's fixed at 21 million units. So it serves as money as a global reserve asset class. Think of a better version as the current SDR. Think of it as a digital version of gold. Now, with Ethereum, the use cases you're talking about are more of the on-chain, the smart contracts, a lot of the utility aspects to it. So it serves a different market. I think Ethereum has great use case, usability, including NFTs and so on. But fundamentally, Ethereum is not about money. Bitcoin is about money, so very different use cases.
We talked about how the regulatory environment will be easier, right? Hence, we're seeing this rally. But there are other issues which are tough to crack, right, Bobby? I mean, access to banking, for instance, banks are pretty reluctant to take on clients whose, the business model is pretty volatile. How do you counter that?
Yes.
And how would that impact where cryptos go from here?
Yeah, the reason the banking sector is tough is because of the existing regulation on the financial sector. So banks are under the burden of regulated globally, mainly led by the US, for the anti-money laundering, a lot of the know your customer. So a lot of these rules are very heavy burdens for banks. That's why they're shying away and don't want to onboard crypto. Okay, that's why it's been a struggle. I saw this in China, 10 years ago, and we're seeing it in the rest of the world as well. But over time, if countries take this seriously, for example, like El Salvador, they've made Bitcoin legal tender. And by that definition, the banks in that country are now compelled to do business in Bitcoin. All merchants are compelled to take payment in Bitcoin. So when you have a shift in the regulatory regime and the shift in the perspective of how Bitcoin is treated in society, you'll see the difficulties from banking sector unwind and allow for more sort of smooth transactions for Bitcoin.
You talked about how it will take time. You said over time. Give us a time frame, realistically, when that might happen.
So there's two aspects for time. In terms of the pricing, people care, a lot of people ask about that, just as you did for the 1 million. I think at least 5 to 6 years out. But I think it's for sure Bitcoin will cross $1 million. It's a matter of time and not whether if it will. In terms of use cases, regulatory adoption, I think with the pro-Bitcoin administration by Trump, we're looking at, he talked about making Bitcoin a part of the national reserves. He's talked about maybe eliminating capital gains tax on Bitcoin. So a lot of pro-Bitcoin regulation. I don't know how much of that will pass in the US Congress, but at least we have a pro-Bitcoin president coming in, and that's very exciting. So that might take as quick as 2, 3, 4 years during his administration. If not, it'll take 1 or 2 administration to sort of let that come in. And the most important aspect I want to remind people is Bitcoin thrives in democracies, because in the end, Bitcoin is about giving power back to the people. So if the people want Bitcoin and crypto to succeed, they will legislate for it, they will vote in, and this is a clear case of people wanting crypto. All the crypto supporters voted in Trump, and we're seeing that. Whereas in contrast, authoritarian countries don't like Bitcoin because it circumvents capital controls, where authoritarian countries tend to have capital controls. So you see that distinction between these two government styles.
We talk about regulation. We have to talk about the regulator. We know the SEC was pretty tough when it comes to regulating the industry. The CFTC, though, was a bit more forgiving. Do you see the CFTC playing a bigger role under the Trump administration?
That I don't know yet. I think the SEC will be sort of, I don't know if reprimanded is the right word, but they'll be asked to sort of tone it down. Their strong sort of anti-crypto stance. The CFTC, I think they're just more neutral. They don't have anything inherently biased against Bitcoin. They see Bitcoin as a commodity, which it should. Bitcoin, it really is a digital commodity, no different than a digital version of gold. So from that perspective, I think the CFTC regulation of Bitcoin is much more reasonable in terms of treating it like that. And the big thing next is, can we treat Bitcoin like currency, right? And this is where it comes into the capital gains tax and all that. With currency, when you trade US dollars with euros, you buy some euros, you go on a European vacation, you come back. You don't have to pay taxes if the euro has gone up in value, right? So with Bitcoin, the question is, can we get that favorable tax treatment? So we'll see how the Trump regulators approach this problem. And the IRS is also a factor too, don't forget.
Right. Bobby, we know that crypto is not for the faint-hearted. We've seen massive volatility. At one point, Bitcoin gave up maybe half its worth. I'm just wondering, with a more predictable regulatory environment, with more clarity in the environment, will we see less volatility, or is this just an asset class that will remain volatile whatever the regulations are?
I think it's going to take another 5, 10, 15 years for the volatility to come down. And the reason is, as a global asset class, so it's not just an asset class, it really should be treated as a global asset class. It's minuscule, okay? We're talking about, $2 or $3 trillion worth of Bitcoin and crypto all in the whole world. And in fact, Bitcoin itself is probably just 1.6, 1.7, 1.8 trillion dollars. If you take all the Bitcoin in the world times its current price of $88,000. So when you look at global asset classes like the real estate market globally, the stock market globally, we're talking about hundreds of trillions of dollars, 100 to 200 trillion dollars. Even gold itself is, I think it's just over $20 trillion. So at that scale, Bitcoin is a young child. It's barely developed, right? So once Bitcoin gets into the big leagues in the 10, 15, in the 100 trillion, that's when it'll stabilize the price compared to other asset classes.
So financial stability is an issue to be considered, especially for regulators like the Fed, right?
I don't see Bitcoin's price volatility as an issue for the Fed. I don't see that per se. It's like Nvidia stock. Nvidia stock really took off a year or 2 years ago, and it's become now worth more than Apple and top market share, right? So is that bad for the New York Stock Exchange? Is that bad for NASDAQ? Is that bad for the US stock market? I don't think so. I think it's just Nvidia stock is just one company that's really, through price discovery, that really the market thinks it should be worth much, much more than people thought 2 years ago. Same thing with Bitcoin. Bitcoin has gone up 1,000%, has gone up 1,000 times in the last few years. Why? It's because the market now understands Bitcoin better than it did 5, 10 years ago. So I think it's natural, as a market discovers that Bitcoin's true use case is a global reserve asset class, then it's going to price it into eventually $1 million, even $5 million, $5 million even.
Bobby Lee, we thank you so much for your time today, for your insights. Bobby Lee, founder and CEO at Ballet. And a clearer picture is emerging on how the Trump cabinet is shaping up. Bloomberg has learned that the U.S. president-elect is expected to name Marco Rubio as Secretary of State. The Florida senator was once a Trump rival who later became one of his most ardent supporters. Rubio has taken an aggressive stance on China's emergence as an economic power and has supported Israel's war in Gaza and its attacks on Hezbollah in Lebanon. Trump is also said to have selected Mike Waltz, a Florida congressman who served multiple hours in Afghanistan, to serve as his national security advisor. Well, in the market, let's take a look at how U.S. futures are shaping up. We know that in terms of Bitcoin easing just a tad under the 88,000 level. S&P futures in negative territory, down about 1/10 of 1%. The other benchmarks also inching lower as we speak. Investors probably taking money off the table. We've seen what a rally it's been. In terms of the Asian benchmarks, some under pressure, taking all the way we are in terms of the MSCI Asia Pac Index, down 0.3 of 1%. Hang Seng also down about 1.5%. Well, coming up, analysts think Alibaba, Tencent, and JD.com could all post strong earnings this week. We'll get insights from Barclays China Tech analyst next. Keep it here with us. This is Bloomberg. Welcome back. China's big tech firms will report earnings from tomorrow amid cloudy prospects at home and rising geopolitical risk. Investors are looking for clues on how they're weathering various challenges. Bloomberg's April Hong joins us, and it's going to be a litmus test.
It surely is. I mean, we're really watching for the health of these companies because it will give us a sense of the base that they're going to be working with if they have to grapple with Trump's tariffs. And, it also gives us a clearer idea in how healthy their scorecards are, whether they can bide their time until Chinese authorities can really roll out more forceful stimulus. I mean, we're hearing some moves on the property front now, but stuff that will really help to reinvigorate consumer spending. So for the likes of Tencent, for Alibaba, it's going to be key. I mean, these are the heavyweights on the Hang Seng. It's going to be absolutely
their version of Mag 7.
Absolutely. These are the Mag 7s of China, right? And the extent in which the streamlining of the business, the cost cutting is going to be able to help them bide their time, put them in better stead. And then you think about how some of these businesses have, domestic focus. So when you think about everything that's happening globally, for the likes of JD, that's been doing quite well in home appliances, or for Meituan, food delivery business, that is a key focus. These kind of parts of the equation, how is that going to figure in, and whether these executives are going to be talking about maybe some confidence or improvement in the business fundamentals. And of course, for Tencent, going to be keeping a close watch on what it says about the game pipeline, as well as any recovery for the ads business.
And of course, they've been positioning for a recovery in the domestic economy. Well, among those closely watching this week's results for insights into the mood of Chinese consumers is our next guest. Jiong Shao is a Barclays technology analyst joining us today from New York. Jiong, good to have you with us. How are you looking at this? What are you anticipating?
Firstly, thanks for having me. We actually are looking for some pretty solid results across the board for the names you just mentioned, Tencent, JD, and Alibaba. It's interesting you name these companies as China's magnificent seven, except their valuation multiple is a fraction of what's for the U.S. Tech companies. But yeah, I think a lot of things are going on, are happening. But the biggest driver for the entire sector is obviously the Chinese government pivot towards market economy, towards growth around the end of September.
Interesting that you talked about the valuations, right? They're trading at a discount, massive discount, versus their U.S. counterpart. How much appetite is there for these companies?
Well, there hasn't been much appetite for these companies over the last 3 years. Now we're just warming up. Hopefully, this time is not another head fake like we have seen several times over the last 3 years. I think, as you guys may know, that the biggest concern among the Western investors is some of the structural issues the Chinese economy has. And that's clearly not something any of these companies can resolve. Of course, some of these companies are probably the best in China. That's why even despite the very, very weak macro economy in China, companies ranging from Tencent on the gaming and advertising side to JD and Alibaba, PDD on the e-commerce side are still going to print pretty solid growth numbers despite the weaker macro.
Let's start with Tencent. It will lead the pack. This is the largest company in China by market cap. I mean, what are you anticipating? What are the headwinds for this company?
We look for a very strong growth in gaming. Tencent had a little bit of issue called a year ago in its gaming business. Now it has fixed some of the issues, and we think that domestic gaming is going to grow low double digits at least, and the international gaming business is going to grow mid to high teens as well. So the gaming is very strong for them right now, and the advertising is also quite good for Tencent. It's going to grow double digits again. Remember, right? China is having a very, very bad macro economy. For companies like Tencent, as big as they are, they're still growing double digits in two of its three major businesses. So that's what we are looking for Tencent to deliver. But now to get the stock to work, Tencent is sort of the top pick among a lot of the US and European investors. But if China indeed is pivoting towards growth, and perhaps investors may be leaning more towards more high octane, high volatile, smaller cap tech companies as opposed to safe havens like Tencent.
It's well and good that Tencent is delivering, and when the economy turns around, it stands to benefit. But China is also on the cusp of tariffs. I mean, Trump talks about 60%. I mean, we know that Tencent has great exposure to the US market. How will this play out for the company?
Well, relatively speaking, actually, they are not that exposed to the US market. They only have an international gaming business, sure. But in the grand scheme of things, it's not that big for Tencent. In fact, it's not that big for most of the Chinese internet companies. For example, the other day, I had a question from an investor. They're like, oh, JD is down 6% because of the tariff. It's like JD has nearly zero business outside of China. How does that work to explain the drop in the share price? So a lot of it is all this price volatility is really driven by sentiment. Every time when people talk about tariff and sort of anti-China rhetoric, the entire group goes down quite a bit. But from their fundamental perspective, the impact is relatively limited in our view.
So where does the stock go from here, Jiong? I mean, realistically, how much higher can it go? I think it's up 40% year to date already?
Yes, indeed. So we get this question also, like investors say, well, the group has been up 40%. And I was like, yeah, but the multiple goes from 5 times to 6 times or 7 times compared to 27 times for their US peers. So it's not a valuation question here, but I think it's going to be extremely interesting for the next 2 months. And here's why. Because global investors, and especially emerging market investors, we believe are still underweight China by quite a bit. Now, the group has rebounded a bit from the bottom and it gave back half of its gain from late September. But now we have 2 months left in the year, and all the emerging markets portfolio managers will have their scorecard, just like these companies that are reporting in the next 2 weeks. The portfolio managers have their own scorecards as well. As December 31st approaching, and your bet on China, overweight, equal weight, or underweight, could be the deciding factor for your own performance. And we believe if the Chinese stocks continue to grind higher in the next few weeks, given the stimulus packages announced every other day by the government, you may see a lot more investors will have to look at this group seriously for the remainder of the year.
Jiong, as we've been saying, it is a challenging external environment, so domestic consumption remains key. I just want to bring in Avril into the conversation. Singles Day, right? What are the indications so far, and how is that a reflection of what's happening on the ground in terms of consumption?
Yeah, I mean, if you look at the earnings reporting, it's going to be a bit backward looking, but the one indicator of potentially how stimulus is maybe having after September kind of worked its way through sentiment, consumer confidence, one of the things is Singles Day. And early indicators to your question are showing that for the likes of JD or, Taobao's Tmall, we're seeing double-digit growth for the number of shopping users. So it looks promising. And we have the likes of Jeffries talking about how, these initiatives to kind of entice consumers or support merchants, they seem to be paying off. At Tmall, things that, we're seeing some of these record growth in terms of shopping users. And even for JD, you can see how, it seems to be bolstering the live streaming side of the business. So things are looking a bit more promising.
And speaking of JD, what is expected from JD.com, Jiong?
Well, so if you look at the numbers, we expect JD to deliver kind of mid-single-digit growth in Q3 and make guide sort of mid-single-digit growth at least in Q4. But if you take a step back, and as you're just talking about the consumption in China isn't that bad, and it will get better. Here's why. We think the Chinese economy rescue plan has 3 stages. The stage number 1 is asset price reflection. That means you need to get a stock price up, you need to get property price up. That's what the government is doing, right? As we all know. The second stage is consumption stimulus. Now you started to see the appliance trading program, is already been driving JD's growth in the month of September, which was double-digit growth year over year, and Double 11, you just heard, it was double-digit growth year over year again. And other subsidies, for example, for the EVs as well, it's all consumption-related stimulus. That's stage 2, but stage 3 is much harder, may take a lot longer time to sort of implement some of the structural reforms. But hey, if we have the stage 2 for the next 12 months, I think we're all good for the group, and in particular for JD. They're not only driven by the consumption stimulus, but also the property market transaction volume has rebounded pretty strongly. And as we know, appliances sales are very much tied with the property sales. So we like JD here. I think the setup, we believe, for JD for the next 12 months looks very promising.
Jiong, to your point about this pivot to growth, pivot to the market economy, it's also probably important to keep in mind that for a lot of these Chinese tech names, authorities spend the better part of 2 years amid a regulatory crackdown. Only in 2023 did they kind of ease their foot off the pedal. Against that backdrop, what is your sense of the kind of potential support, maybe not directly, we can actually be expecting for Chinese tech sector as a whole?
Yeah, well, so you're absolutely right? Over the last 3 years, the tech companies will kind of got cracked down one after another by some of the very, very tough, and you may argue unreasonable regulations. By now, I think Chinese government may have a bigger problem on their hand. They need to rescue the economy. They now need these guys more than before. And now you start to hear about government supporting technology companies, even the gaming companies, right? They used to call games as spiritual opium or something like that. But I don't think you hear that anymore. So yes, it's not going to be like this forever. But at least in the foreseeable future, until the economy recovers or rebounds strongly, the tech group appears to be in a good spot in front of the government.
Does that include for Alibaba, though? Because we know how it was really front and center in that regulatory crackdown.
Oh, yeah, we do think that include Alibaba. I think, yes, Alibaba, the cancellation of the anti-IPO 3 years ago was the beginning of the crackdown, right? And Alibaba has since changed the management and also pivoted to the growth by itself. Alibaba used to focus around defending its margins. Now they are in the investment mode, in the growth mode. At least in the last couple of quarters, their GMV growth, meaning general merchandise value sold on their platform, is really no longer that much below, if anything, the overall industry. We do think that sort of more favorable regulatory environment does include Alibaba and many others like Baidu and BYDs and all the EV players.
For Baba, though, Jiong, I mean, it is intense competition from the likes of PDD, Temu. How might this play out for Baba?
Right. So the sort of the idiosyncratic value driver for Baba is not in e-commerce. People often look at Baba as an e-commerce player. Yes, it contributes all the profits, but Baba has so many other valuable assets people don't give any credit to. They are the biggest cloud player in China, third largest in the world. Right now, you probably have zero value given to the Baba's cloud business. They have fast-growing international commerce business, and also very little value given to that business. I think for Baba's management and for Baba's shareholders, the key is to highlight the non-domestic e-commerce part of the business to show Baba is so much more than the Taobao and Tmall.
So what's the fair value for Baba if investors have not taken into account its fantastic cloud business?
I think we have $137 target price. I may have, being off by hopefully $1 or $2. It's difficult in general to have a fair value on any tech stock, Baba or Nvidia. Or Tesla. It's much an art than science. But I think you put the Baba's number in front of any analytical investor's desk, on their desk, it will not be difficult to justify and come up with a stock price which is $150 or more.
Since you mentioned Tesla,
by the way, our own stock price, market price, is based on 7.5 times of EBITDA, and a single-digit multiple compared to global tech peers. And Chinese tech stocks are the cheapest tech stocks in the world.
So let's bring in Xiaomi, right? Since you touched on Tesla. It is the EV business that's in focus. Where do you see that headed? How strong is that business for Xiaomi?
We initiated on Xiaomi about 3 months ago. We increasingly have become bullish on Xiaomi. So first off, if you look at its core business, cell phone business, right? And Xiaomi is the biggest cell phone maker in the world. Very few people have heard of in the States because they don't sell in the States. Their market share around the world, outside of China, outside of US, is around 20%. And they're moving higher end as well. Like for the first half of this year, as we know, the global smartphone business is not really growing that fast. But Xiaomi's smartphone business was up 30% year over year. And with very decent margins. And they just launched the newest model called a Xiaomi 15 3 weeks ago. And priced at 600 RMB or 500 RMB more than the last version a year ago. And the sales so far in the last 2-3 weeks, media reports suggest it's more than 10% more than a year ago. So they're doing great in the cell phone business. But the car business is really impressive. I visited Xiaomi's factory a month ago when I was in Beijing. The factory is filled up with all the robots. There are really that many people there. So the automation of their factory is very, very impressive. That's why in the very first quarter, Xiaomi delivered its first ever EV car. The gross margin for the car was 15%. Now, you may not feel that 15% is that high. In the world, there are only 3 other companies have double-digit gross margin for the cars. The Tesla and the 3 Chinese companies. Tesla, Xiaomi, BYD, and Li Auto. And we think the EV margins for Xiaomi will continue to go higher going forward as they increase production and launching new models. So we think Xiaomi, for less than $100 billion company, is one of the greatest tech company in the world.
You talked about how strong the EV business is for Xiaomi. We talked about how when you take a look at the second quarter, it pulled in about $900 million. Quantify it for us, the kind of growth we can anticipate for the EV business for Xiaomi. I mean, the likes of the Ford CEO, who's been driving a Xiaomi EV for the last 6 months, he says he's not giving it up. So there's a lot of buy-in when it comes to its cars.
Yeah, so I don't know if you have ever seen a Xiaomi car. It does look like a Porsche, and you pay $30,000 for it. It comes with 9 different colors. You can pick and choose your favorite color, and the growth for the EV is not linear, by the way. And next month they're going to deliver another roughly 20,000 cars. And you said, wait, you delivered 20,000 cars last month. Why you only deliver 20,000 cars this month again? Because they already maxed out the capacity. That's all they can make. They have a lot of backlog, a very large backlog, and their second factory probably won't be up and running until second half of next year. So if you look at the number-wise, you may be disappointed. You say, well, you haven't grown over the last few months by much, but that's because of the capacity issue we talked about. But they're constrained by capacity. Once they have the second factory up and running, have the second model up and running, you're going to see a step function again in the car delivery. Now, not all the EV car companies are the same in China. We actually are very cautious on bulk of the EV makers in China. We think most of them, let's say 80% of them, should go out of business in the next 5 years or get bought by somebody. Like in America, 100 years ago, there were 200 car makers. We eventually ended up with only 3. It's going to happen in China in the next 5 to 10 years.
Jiong, it's been fantastic having you on the show. Thank you so much for your insights. Jiong Shao, analyst, China Tech at Barclays. Now, still to come in the next hour, we're live at the COP29 conference in Baku, where we'll speak to ExxonMobil CEO Darren Woods. Don't miss that interview. Keep it here with us. This is Bloomberg. All right, in markets, we're keeping an eye on Hong Kong benchmarks on the back of that Bloomberg scoop that China is mulling cutting taxes for home buyers to about 1% from as high as 3%. Hang Seng currently down about 1.8%. HSTech also in negative territory, and even the China Developers Index in negative territory, down about 1.3%, despite plans by China, according to a Bloomberg scoop, to slash home buying taxes to boost that property sector. Of course, this is a sector that's been under a lot of pressure. In the FX space, we're keeping an eye on Asian benchmarks. Of course, expectations are that the dollar will remain strong. The yen, in particular, in focus, 153.70. Of course, that 155 level is one we're watching currently. The yen flat versus the USD. The Chinese yuan also in focus on the back of those stimulus measures. The yuan at 724.38, currently down about 0.2%. And of course, in terms of the Korean won, it is flat at 1401. And one asset class we're keeping a very close eye on is Bitcoin and other cryptocurrencies, surging again, currently surpassing an 88,000 level. It did drop just below that level just slightly earlier, currently up about 0.1%. Ether unchanged, 33.27 is the level we're looking at. Now, before we go, here's a look at our guests for tomorrow. We'll take a closer look at the biggest moves in currencies with Sexo's global market strategist and head of FX strategy, Charu Chanana. Plus, OCBC CEO Helen Wong, she'll be joining us exclusively for our ASEAN Ahead segment. We'll discuss the outlook for Singapore lenders after shares touch a record high on stronger earnings. But coming up next, Horizons Middle East and Africa. We're live at the COP29 conference in Baku, where we'll speak to ExxonMobil CEO Darren Woods. That is it for Insight. This is Bloomberg.